What a volatile housing market we have right now. So for example, Redfin just announced today that the national median sold price just reached a new all-time record high yet again. On top of that, asking prices also reached a new high, yet the share of price reductions increased to a 3-year high at least during the same time frame. Some very interesting dynamics happening right now. On top of that, we have all-time record lows for housing affordability as well. So let's go ahead and dive right in. This is kind of a wild report just announced on Thursday. It says the median U.S. Monthly housing payment, these are housing payments of would-be homebuyers. They basically look at what's the asking price on a national level, the median asking price, and on top of that, what is the weekly rate according to Freddie Mac last week. And based on that data, we reached a new all-time record high for average monthly housing payment at just under $2,900 per month during the 4 weeks ended May 5th, up from 14% from a year ago, as home prices reach a new all-time record high. And now the U.S. median sold price increased by 4.5% year over year. Now, here's something I do not agree with him. It says the supply of houses for sale lost momentum with prospective sellers jittery about high rates. It goes on to say here that new listings rose by 9% year over year, the smallest increase in about 3 months. So I'll share some stats regarding pending home sales, new listings, and active listings, or the amount of houses for sale. When looking at the amount of houses being listed for sale, these are new listings, that is still increasing or still up from last year, but it actually lost momentum. However, when looking at the amount of houses for sale right now, there's a very, very small decrease compared to last week's numbers, which I'll share with you guys here in a little bit. However, though, when looking at the same time frame right now compared to the past several years, we're at least a 3-year high during the same time frame regarding housing inventory. They also say here that home sales fell due to high rates and low supply. Again, that figure low is relative. We have a 3-year high during the same time frame, which I'll share with you guys. Pending home sales, a measure of contracts being signed between buyers and sellers of existing houses, dropped 3% from a year ago, the biggest decrease in about 2 months. There are also signs that competition for houses are slowing during a time of a year when typically our housing market tends to speed up. So pretty wild because every single year our housing market tends to be in full swing, basically starting in April through June. That's a spring home buying season. But we're seeing some early signs that overall some activity regarding home buying demand is actually going down. So Redfin says here that 30% of houses that sold over the previous 4 weeks sold above the seller's asking price. Again, this means that 70% are selling at or below the seller's asking price. So very low levels here overall. That's flat from a week ago and also down from the 32% we saw from a year ago. So a year ago, 32% were selling for over the seller's asking price. Now it's at 30%. This is also way lower compared to 2 years ago when that share was actually over 50%. I also want to give you guys an update regarding mortgage rates as well, because rates have been volatile to say the least. And as of today, which again is on May 9th, we're at a 1-month low. About a week and a half ago, we were at a 5-month low, or a 5-month high, I should say, the highest level since mid-November last year. So it says here, encouraging economic news push daily average mortgage rates down from a 5-month high of 7.5% on April 30th, about a week and a half ago, to about 7.2% at the end of last week and into this week, bringing buyers a little bit of relief. So let me just share very quickly regarding a update regarding rates. So the daily rate, according to the Mortgage News Daily, as of today, is at 7.18% for a 30-year fix. Again, that's for the best rates overall on a national level that you can get. If you have a 780 credit score, you're putting down at least 20 to 25% down. And on top of that, you're buying a primary residence, not an investment property, and also not refinancing. So anyways, that rate is at 7.18%. Jumbo at 7.4%. FHA 6.63%, VA 1 basis point higher than that at 6.64%. Now here's a look at a chart looking at the 30-year fix. It has been falling ever since really May 1st from the highs we saw at around 7.5%. Now we're at 7.18%. 1 year ago, we were at just under 7.7%. So rates have decreased by about 50 basis points over the past 1 year. On top of that, we're also way lower compared to the peak we had back in last October when the average rate was around 8%. Now we're at 7.18%. So I'd love to hear from you guys about this. What do you guys think about this decrease in rates going from 7.5 to 7.18%? For you, if you guys are looking to buy a house, is that going to entice you guys to get off the fence and buy a house because rates have decreased by 40 basis points? Leave me a comment below. I would imagine that most of you would want to see home prices decrease as well because of the cost of property taxes and of course your payment in general because you have a higher loan balance because home prices are still remaining very much elevated. But again, I'd love to hear from you guys. Please leave me a comment below. Let's talk about some leading indicators and we'll talk about some lagging indicators, talking about home prices, housing payments, pending home sales, new listings, etc. So let's first have a look at mortgage applications. This is based on a weekly report from the MBA. They actually announce this every Wednesday. So applications for home loans to buy houses actually did increase by 2% from 1 week ago, but we're down 17% year over year. On top of that, Redfin's homebuyer demand index. This is an index which measures the amount of real estate showings and other home buying services that they get for their agents. That was down 6% from a month ago and also down 12% year over year. On top of that, touring activity. This is based on the amount of real estate showings across North America. That actually was up by 32% compared to the start this year. At this time last year, it was up by 27% compared to the start of 2023. Also, Google searches for homes for sale were essentially unchanged from a month ago and also were down 18% year over year. And that's according to Google Trends. Let me just open this right here. Google Trends is actually a really good website. Sometimes I use it to try to figure out what are people actually searching for on the web, and I can make videos based on that. But you actually can search for anything here. But homes for sale is what we're looking at here. I actually changed this to the past 12 months to see the difference between now and 1 year ago. So here's the amount of people searching for homes for sale on Google. That index is at 75. A good way to think of this is that an index at 100 means the peak level of interest in that search term over that time frame. So that was back in, when was this? That was back in early July last year. The index was at 100. So right now we're at 75, quite a bit lower than that. 1 year ago, we were at 87. So a low level of interest in people searching for homes for sale. On top of that, it's been flat all year, right? Starting in early January, really not a lot of movement at all regarding Google searches, which is different because in general, again, we have a spring home buying season. You tend to see more people searching for house for sale, applying for home loans, reaching out to Redfin or myself, for example. But right now we're seeing a low level of interest for people searching for houses for sale on Google. In addition, we're seeing applications down 17%. The Redfin home buyer demand index down 12%. And again, touring activity is up compared to the start this year, but overall we're at low levels, especially regarding Google searches. All right, let's move on and talk about some lagging indicators. This is based on the median sale price. That increased to nearly $385,000. That's up 4.5% year over year, and a new all-time record high. On top of that, the median asking price on a national level, also a new all-time record high. In addition, average monthly housing payments, a new record high, and also up by 14.1% on a year-over-year basis. Again, keep in mind right here, this price, $385,000, is a lagging indicator what our housing market was like approximately 1 to 2 months ago when the home buyer, submitted their offer for a house for sale and got their offer accepted. In general, it takes approximately 30 to about 45 days in order to get the keys to your house or for the sale to be finalized. And therefore, any metric that has to do with a closed home sale is definitely a lagging indicator and does not count for the fact that rates were increasing in late April, for example. All right, let's talk about home prices here. So right now, $385,000. It's up by 5% year over year. This, by the way, is on Redfin's data center, a public website. So the previous all-time record high was about a week ago or so. But before that was way back in more or less June of 2022. So right now we're up by about $2,000 from 2022's peak, and also way higher compared to 2021. At this time in 2021, we're at about $325,000 and up 19% from 2020. Now we're only up by 5% at $385,000. Let's also look at asking prices overall. These are houses being listed for sale. What is the asking price? Which is just this, this chart is just crazy, right? Up by 6.5% year over year. We had all-time record highs for prices back in 2022, more or less May and June. Back then, the median listing price, these are asking prices of houses being listed for sale, was just under $400,000. Now it's at $419,000. So one thing I will add is that even though we're at all-time record highs for housing or for asking prices, the share price drops at least a 3-year high during this time frame. The share price drops, according to Redfin, is at 6.2%, way higher compared to the previous 3 years. On top of that, we're getting very close to a 3-year high for any month as well. The peak was set back in October of 2022 at 6.7%. Now we're at 6.2%. Now, what's absolutely crazy about this, you guys should be aware of this, is that we tend to see a low level of price reductions during the spring home buying season because we tend to see a lot of people looking to buy a house. So it's quite alarming to me to see that we have very close to all-time record highs, at least over the past 3 years, for any month. And now we're in early May. Just kind of blows my mind. Anyways, just look at this. Look at 2021. The lowest was during the spring home buying season, and the peak was in the fall and winter months. Same for 2023 and 2022. So it's pretty crazy to see here that the share price reductions is basically going straight up, whereas other years, excluding 2022, where the share price drops were increasing, but not the same rate this year. Anyways, anyone can ask for a high home price for the house, but this to me is saying here that home sellers are being overzealous because the share price drops basically going straight up. In any case, let's get back to Redfin's report regarding the 50 most populous metros to see how they fared regarding home prices. So if you guys missed my video from 1 week ago, I shared how there was not a single one of these 50 biggest cities that decreased compared to 12 months ago. Now that changed once again. So San Antonio, Texas is down by 1.9% year over year. Regarding the median sale price. We've had San Antonio, Texas, Austin, and Houston decreasing for several weeks and months. And again, we're reversing the trend because last week, not a single city decreased. Now San Antonio is down year over year. Now, something that did not change is Anaheim, California, where Disneyland is in LA, or the LA area, is up by 21%. If you guys live in Anaheim or have any insight regarding that, my guess is that because there's not a lot of land to build on, that's one reason why existing home sold prices have increased by over 20%. In contrast, areas like San Antonio, Texas, and much of Texas, a lot of building going on there because of that, home buyers have a lot of options to choose from regarding the resale market, but also new houses to buy as well. In any case, after Anaheim, California, was West Palm Beach, Florida, Detroit, San Jose, and New Brunswick, New Jersey, all increasing by more than 12%. Again, a lagging indicator of our housing market though. All right, let's change gears slightly here and talk about pending home sales, a measure of contracts being signed between buyers and sellers, new listings, a measure of people listing their houses for sale, and active listings, or the amount of houses for sale or housing inventory. So pending home sales decreased by 3% year over year. That's tied with the two previous 4-week periods for the biggest year-over-year decrease in the last 2 months. In regards to new listings, that increased by 9.3%. That's the smallest increase since the 4 weeks ended February 11th, with the exception of the 6.6% increase during the 4 weeks ended March 31st due to the holiday period. In regards to active listings, that increased by 13.3%. So again, we're seeing contracts being signed, demand decreasing year over year, whereas we're seeing supply, new supply, as well as houses actually for sale right now, increasing as well. So demand going down, but supply actually going up. And I'll share that with you guys right here. Let's take a look at new listings. So new listings during the previous week, last week, it increased by 15.1%. Now it only increased by 9.3%, but still is increasing, right? It also is higher compared to last year's levels every single week so far this year. But we're still below levels in 2022 as well as 2021. Now here's where it gets pretty wild because we're seeing more new listings hitting the market. And have a look at this. Let's look at active listings first. So active listings, remember, Redfin's saying here we have, what is this? What was our quote here? Redfin says we have home sales fell due to high rates and low supply. I mean, it's all relative. I mean, speaking of, levels we have right now compared to 2017 through 2019, we should have in the range of 1.1 to 1.2 million houses for sale. So the amount of houses we have for sale is far below, it's approximately 40% below pre-COVID levels. However, when looking at the past several years, we're at least a 3-year high during the same time frame. On top of that, it's basically been going straight up ever since January this year and has been increasing in momentum. The only change I noticed is that this week up by 13.32%. The previous week was up by 13.73%. So increasing, but increasing at a slower clip, but just barely, 0.7 compared to 0.3, and also way higher again compared to the past several years. All right, going back to Redfin's report, let's talk about how each of the 50 biggest cities fared regarding pending home sales and new listings. So pending home sales actually increased in 15 of the 50 biggest cities. In contrast though, 35 of them are flat or down compared to a year ago. So the biggest increases of contracts being signed is San Jose, California. It has been leading the nation for quite some time, up by 21.9%. Then we have Anaheim up by 9%, then Oakland, San Francisco, and Seattle. Interesting to note that 3 of these 5 metros are all located in the San Francisco Bay Area, the biggest increases of pending home sales. And also 4 of the 5 are located in California. In contrast, the biggest decreases of pending sales is actually in Phoenix, Arizona. Then we have Atlanta, Houston, Jacksonville, Florida, and Orlando, Florida. In regards to a measure of new listings decreased in 6 metros year over year, but increased in 44 of the 50 biggest cities. So San Jose, California led the nation once again, up by 35.6%, yet pending home sales did increase, but they only rose by nearly 22%. So pending sales are not rising as fast compared to the amount of houses being listed for sale in San Jose. So I'm curious to see what will happen regarding home prices there in the coming months. Anyways, looking at the number 2 spot, new listings increased the second most in Phoenix, Arizona, up by 26%. Then we have Seattle, San Diego, and Oakland, California. In contrast, the biggest declines of new listings is Chicago, down 9%. Then we have Newark, New Jersey, Warren, Michigan, Atlanta, Detroit, and Providence, Rhode Island. Let's also take a look at the month supply as well on a national level. We're at 3.2 months. That's an increase of 0.5 months year over year. The orange line is 2023. At this time, the month supply was around 2.7 months. Now it's at 3.2 months. Also, at least a 3-year high during the same time frame. In regards to pending home sales selling fast, 45% of all pending home sales went under contract within the first 2 weeks of the house being listed for sale. That is a 3-year low during the same time frame. So 45% sold relatively fast right now. But back in 2022, at this time, it was approaching very close to about 60%, around 55% selling very quickly within the first 2 weeks. Now it's only at 45%. Days in the market, this is how fast or how slow houses are selling. This is a lagging indicator though. Days in the market's at 34 days. This is at least a 3-year high as well during the same time frame. It's roughly on par with last year's levels though. Let's also take a look to see how fast or how slow houses are selling. So the median days in the market, that's a time frame when you list your house for sale until you accept an offer from a home buyer. That's at 34 days right now. This is slightly higher from last year's levels, but at least a 3-year high during the same time frame. So for example, at this time in 2022, days in the market was around 20 days. Now it's approaching double that at 34 days. Also, like I mentioned at the very beginning of this video, 30% of houses sold above the seller's final list price. This means in contrast that 70% sold at or below the seller's asking price. But at 30%, this is at least a 3-year low during the same time frame. We're not experiencing the big increases we saw during the run-up of all-time record high home prices back in 2022, when back then the share was at about 55%. Again, we already know about the share price drops, getting very close to at least a 3-year high, but again, way higher compared to the previous several years. And lastly, before I wrap this video up, I'll provide a summary for you guys as well. The average sale price to final list price ratio is at 99.4%. This means for the houses that did sell, they sold for 0.6 percentage points less than the seller's final list price. This is also approaching a 3-year low as well during the same time frame. Also way lower compared to 21, when on average houses were selling for about 1% over asking. And also during the peak of May 2022, houses on average were selling for 2.5 percentage points above the seller's final list price. Now they're selling for slightly below that at 99.4%. Additionally, Redfin's homebuyer demand index is also a 3-year low during the same time frame as well, also down by 12% year over year. So kind of just wrapping this video up, I just want to kind of go over this right here because we have all-time record highs for home prices. But again, this is a lagging indicator of what our housing market was like when the home buyer got their offer accepted approximately 1 to 2 months ago, when frankly, back then rates in general could have been a lot less than we have today. On top of that, we have all-time record highs for asking prices. But again, we have a 3-year high for the share of price reductions during the same time frame. So even though we're asking for all-time record highs for home prices, we have very close to a 3-year high regarding price reductions as well. Meanwhile, home buyers are being hit by high home prices and high rates, and that's why we have all-time record highs for your monthly housing payment, making housing even less affordable than it was when we had 8% rates back in October of 2023. Also regarding leading indications, applications by houses down 17% year over year. Redfin's index down 12%. We're also seeing less people searching for homes for sale on Google. So in my personal opinion, in order to kind of gauge which direction we're headed, let's have a look at these leading indications of home buying demand. And in my opinion, we'll have to look at the direction of mortgage rates and inventory levels in the coming months to see where we're landing here. But again, it's just kind of wild to see these trends at these low levels during a time when we should be seeing our housing market flying off the shelves But again, every housing market's different. In my area in Sacramento, a lot of houses are still selling for over the seller's asking price, home sellers getting multiple offers. That may be different compared to in Austin, Texas, Houston, other markets that are seeing more softness in the housing market. But we're not seeing the craziness. But again, we're also seeing areas like the Midwest and the Northeast that are experiencing big increases in prices as well. Anyways, I hope you guys appreciate today's video. A little bit of a longer one today, but I hope you guys got some value out of today's video. If you did, please hit the like button. I appreciate that. Of course, appreciate you. Hope you guys have an awesome day and look forward to seeing you in the next video.